Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Whirlpool, one of the marquee brands in the consumer durable sector and is doing really well over the last one and a half years. So let's understand what needs to be done and what is the right price to get into a stock like Whirlpool. So let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Now about Whirlpool, the company. It was formally established in 1911 in United States and came into India just after independence and has been doing well over the last 35-40 years. Its focus is on providing white goods for consumers, and they are mainly into washing machines and AC. They are in leader in top door washing machines across India and provides very sophisticated washing machines for all households. They also manufacture refrigerators, microwaves, and kitchen accessories, and it is one of the biggest consumer goods brands in India, perhaps the biggest consumer goods brand because they produce a lot of products and all of them sell very well across the board. If you look at the financials of the company, then the sales of the company has grown by around 17%. But look at the profit growth. The profit growth has been absolutely magnificent. If we compare September 2020, FY20 versus FY19, 60% growth in profits. Yes, lower taxes has boosted in numbers, but look at the return on equity. It is a 21%. Although the operating profit margin is low at around 10%, but the company is absolutely zero debt. There is no debt on the company's books at the moment, and with such a vast business with so many verticals, so many products on the horizon, and so many products currently being sold, being zero debt is absolutely tremendous for such a company. So why the euphoria for Whirlpool? Why people are just gunning for such a stock? And the stock has been relentlessly going up from 2014-15 levels of around 550, 560. It is currently trading at 2400. So it has become a four-bagger already, more than 4x in 4-5 years. So people talk about doubling of shares in 4 years. It has become 4 times in 4 years. It is the moat and leadership of the group. The Whirlpool group currently sells microwaves, washing machines. You have ACs and other water purifiers, etc. Many products that Whirlpool sell, and all of them are selling pretty well. In some, they are the market leaders, in others, they are in the top three in the division. So, moat and leadership is there. Strong return ratios are there. So, 20% ROE in a sector which is extremely competitive. And then you need to understand that the economy of India is going through a lot of trouble, and yet it is producing 50%, 60% profit growth. Is absolutely tremendous. The management is top class. I remember that 3-4 years back when India was going through another turmoil of sorts in the consumer goods industry, the management was very frank in telling that the growth will not come for at least 2 quarters, and precisely the next 2 quarters were subdued. But after that, we had a pickup in the growth and numbers. So, a very clear cut management with honesty and integrity. A business has all the longevity because washing machines will keep on selling, as will do ACs and microwave ovens, etc. So one needs to have an understanding that such businesses last for a very long time, just like a Nestle or an Asian Paints. Whirlpool will continue to sell its products unless something really goes bad with the company. And remember that quality is currently selling at a premium. So you look at all the companies, whether it's DMart, Nestle, Asian Paints, HUL, etc., and so would something like a Whirlpool. Even white goods companies which are selling well, like Hitachi, etc., are also trading at 70, 80 times. So there's no point, I mean 50 to 60 times. So there's no point telling that Whirlpool is currently trading at 65 times. Although I believe that being at 65 times is extremely expensive, and that's why I have come up with this video in which I would like to let you know as to when you can get into a stock like Whirlpool. So if you look at the valuations of the company, then currently the stock is trading at 65 times earnings. And I remember that the bear case PE in 2016 was around 45 times. You cannot expect a similar kind of fall, or it can happen, but you cannot just wait for such kind of a fall as we saw in 2016 during demonetization. But I believe around 52 times earnings it should come down to, which means it should go down by at least 20% from here. But then again, earnings will improve. So supposedly, even if at the end of FY20, say in June, in 6 months time, we could be close to an EPS of 46 rupees for Whirlpool, and the target could be closer to 2300, 2320. So not far off from the target. Currently the stock is trading at 2420, 2450. So probably a 5%, 5 to 7% decline from these levels will be a good buying opportunity. And wait for the results of December to make your judgment or take a decision on whether to buy or not. Till then, I believe that current price is not extremely expensive considering 1 year forward earning. Although at this point of time, at 65 earnings, it is expensive. But if we get two very good quarters that are expected, then the company will continue to go higher, the stock will continue to go higher. So wait for the December quarter results and then take your call. But any 10%, 8% decline from these levels will be a good buying opportunity. Of course, over the next year and a half or so, we could see levels of 3400 or even 3700 in the coming 18 months. So keep that in mind while you avoid this share. Then you might even miss a further up move of another 50% over the next 1.5 years or so. If you look at the technicals of the company, then the strong support lies at around 2150, 2175 levels. So around about 200 points lower, around about 7-8% lower from the current levels. You could see very good support in the stock. And the short-term support lies just about 100 rupees lower at 2360. That's just about 3.5% or so. But the stock has already run up around 80% in the last 12 months, and as I explained, over the last 4-5 years it has been a four-bagger already. We could see a correction of around 8 to 10%, and that would be a very good buying opportunities, I must say, with the kind of numbers that Whirlpool is producing. But be careful, look at the numbers and only take your decision based on that. There's a major breakout expected if the stock closes about 2550, which will be a new high, and we could see 2800 to 3000 levels coming in very fast if that happens. And I believe that that would only happen when the results come up with some stupendous results, the company come up with some stupendous results. So you can buy it even at these levels. It won't be a bad idea to just buy 20% of your total holding at these levels and wait for results, and after that you buy when the stock goes higher or goes to around 2150, 2200 levels. So what needs to be done? I believe that you can buy it close to 2200 if it comes down to that level, and it is a market leader, remember, in its space, and that's why it is having a premium of around 60 times earnings. Probably it will come down to 50 times in difficult times in the market, but you cannot expect the stock to trade at 25-30 times that used to do 4-5 years back. So keep that in mind. Look for massive falls to accumulate if something goes wrong with the economy, or some external factors happen and the stock market really falls. Then these are the gems to just get hold of. Hard to trade such stocks, so do not trade in such stock. Invest for a longer period of time. It is a very good long-term buy. So this was my video on Whirlpool. Please like and subscribe my channel, hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.